Everyone, welcome to the TimingResearch.com Crowd Forecast News, episode number 301 for June 7th, 2021. We are recording this at 1 p.m. Eastern Time. My name is David Kosmitter. I'm the creator of TimingResearch.com. And today, as always, we're going to start out by talking about the S&P 500 and then move on to everything else interesting going on in the markets today and what we expect to happen for this week. So today I've arranged for a great group to join us, and we have Tim Racette, ProTrader Mike, Alaina Nicole, Leslie, Leslie, can you?
That's okay, Leslie Jouflas.
Okay, yes, thank you. Harry Boxer, and as always, the option professor is here to moderate, so I'm gonna go ahead and turn it over to him.
Great. Okay, welcome everybody. It's going to be a big week, and we're starting out with a very good group here because we've seen this S&P go up into this 2230s area and back away. So it'll be interesting to see how our guests feel about the general market. I guess they'll also have their opinions on specific things that they're following as well, because we have a diverse group of guests here today. To get started, we always start off by asking the guests how they feel about the S&P 500 from today's opening until Friday's close, as their best guess on what they think might happen. So we did open up higher at 4229 ballpark on the S&P. So using 4229 as a gauge from that number to Friday, how do we feel the S&P will end the week? Let's start out in order that I have here. Tim, can you give us a little insight on your feelings?
Yeah, I'm going to go with flat. I know it's kind of a not the answer most people want to hear, but I think with the Fed meeting coming up next week, we're kind of stalling out on some of this limbo pattern up here.
Sure. I'll get around to asking you reasons behind your feeling and also your level of confidence. But I just for the initial roundup, just where you think it'll go. So you're saying you feel flat looks like a pretty good scenario. ProTrader Mike, what are you thinking?
Thank you for asking me and having me on the show.
Sure.
I think we're heading lower.
Okay. Well, you got a 10-point head start, Mike, and I know that's not a bad thing to have, right? A head start.
Hey, the trend is my friend.
All right. So you're thinking lower. Alaina, how's your compass? What are you thinking?
Oh man, I think we're actually going to head lower too.
Okay. And then we're over to Leslie.
Hi, well, thanks for inviting me. It's really fun to be here today. Well, I'm a pattern recognition trader, so I go by patterns, and right now there are some sell patterns on the S&P 500.
Okay.
However, we have such a well-defined range, so maybe a little bit later we can get into some specific numbers to look at.
I'm going to be coming back to you, Leslie, to give you a time to go into what's behind your opinion.
Okay.
We're just trying to quickly go through just a basic idea. So we've got a flat, we've got a lower, we got three lowers essentially. And Harry, how are you feeling?
Well, I'm going to go the opposite way, only because I'm seeing underlying technicals, particularly today. If you take a look at the advanced declines and up-down volume, it's astounding that the indices are down with the 4-to-1 advance of up volume versus down volume on NASDAQ is 4-to-1 positive right now with the index, with the NASDAQ down, which to me is a positive divergence. So I'm going the opposite way, and I'm going to say that it's going to surprise to the upside.
That's an interesting point on the AD line, Harry, because on Bloomberg, I was watching one of their analysts, and they said that the AD line had made a new high last week before we had Friday's print. And so he was predicting that the move would be to the upside on Friday based on the new high on the AD line. So
I agree. I 100% agree with that. And it's not just NASDAQ. New York is similar as well.
Yeah, I think he was talking S&P actually. Yeah.
Right.
Yeah.
Yeah, right, I think we we skipped the bios. We're too excited to get right into the show.
Oh, I'm sorry. You're right. All right.
Yeah, let's go through find out a little more about everyone.
I'm sorry.
First.
I was under the assumption everybody knew everybody already, and that was a bad assumption. Hey, Tim, a little quick background on yourself and what's going on at eminimind.com, please.
Yeah, you bet, Jim. So yeah, I'm Tim Racette. I blog at eMiniMind, futures trading mostly, do some swing trading as well. Chicagoland native, but now I live out in Arizona. And yeah, mostly intraday, morning session trading, mostly the ES, but a little NQ as well.
Sure. Okay, great. And ProTrader Mike, you've been on before, so I thought everyone would already know you, but for the uninitiated, what's going on at mojodaytrading.com?
Mojo Day Trading has been very exciting in the last month or so with the short squeeze phenomenon in AMC and GME in the Mojo Day Trading chat room. We have a solid group and community of traders in the chat room that join every morning, and nice group of moderators, and we're all calling out picks and doing trade plays, trading the hot Momo stocks, whatever is in hot momentum for the morning. And also, like the other partner there, we're trading NQ in the futures, trading specifically off level 2 and watching SQQ, which is a direct correlation to the NQ futures. So I'm able to anticipate from level 2 which direction the futures are going, trying a couple minutes before it happens. It's been pretty successful for me.
Good, good. Alaina Nicole, a little bit about optionsbay.com and yourself, please.
Yeah, so I'm Alaina. I have been trading for a little over a year now, and I've just been into investing and also options trading. And I also do a lot of teaching. I teach classes and things like that and help like beginners get into the stock market.
Sure. And there's quite a bit of those.
Oh, yeah.
I think they said 10 million accounts were opened up last year. So that's quite a new group of traders, huh?
Oh, yeah. The meme stocks are
Yeah.
interesting.
Leslie Jouflas of tradingliveonline.com. And you said you had certain things that you do. So this would be a great time to explain that.
Hey, yeah. Well, I'm Leslie Jouflas, and I'm also a chartered market technician. I've been in the markets for over 20 years, trading and teaching the markets. My website is Trading Live Online, and I focus on pattern recognition. I use really classic technical analysis patterns. I use AB equals CD patterns, some of the harmonic repetitive swings. And I've been working with traders for many, many years now. I've got 2 books. One is Trade What You See, How to Profit from Pattern Recognition. Lots of articles out there that I've written. I do a lot of spots for stockcharts.com a few times a month. And I really enjoy helping to educate traders in the market.
Sure.
And also, I want to mention too, I'm going to be doing the Synergy Trader event tomorrow as well. That's going to be at 2 p.m. Eastern time.
Yep.
And that's on the subject of identifying range trading versus trend trading.
Perfect. At the end of the broadcast, we're going to let each one of you go through exactly what you're going to be covering at the event tomorrow. So you'll have more time to expand on that at the end as well. And finally, Harry Boxer obviously has been around the block a couple of times. I certainly are well aware of Harry Boxer, but for the people who are not, Harry, a little bit about yourself and the techtrader.com.
Yes, thank you. The techtrader.com has been around for 20 years since, matter of fact, our 20th anniversary. I think it's July 20th, something like that. And I wrote a book on trading called Profitable Day and Swing Trading. I'm a speaker at most of the traded expos and money shows. I'll be in Orlando on Saturday to do a training seminar. I have a trading room at thetechtrader.com with several hundred people in it. We're pretty much day and swing traders. Most of the trades are day trades, and but there's a lot of swing people who don't have the time to be in the room all day, so they're swing traders. And I specialize in pattern recognition. I'm a big believer that patterns form on all time frames, and I use chiefly 1-minute intraday charts for my day trades and 5 and 15-minute charts for my swing trades. I'm looking forward to today's participation.
Me too, Harry.
Sure. Yeah, absolutely. Okay, so let's get back on where we were, which is where the markets are going. I got very excited about that, so sorry for front running the intros. With regards to the reasoning behind it and things that you're looking at that would be, giving you a reason for your opinion. Tim, you're looking for kind of flat. What's your level of confidence and what's your reasoning behind it?
Yeah, I think in part, the last couple of pullbacks that we've had from a technical perspective on the daily chart have been super short-lived. And with the FOMC meeting next week, sometimes that can put a little bit of a a stalling out to some bigger moves. So while I definitely see a few signs of some possible bearishness, I think that will just be wiped away by sort of some of that FOMO and some of that wait and see on the Fed next week.
Yeah, if people are waiting to see anything, aren't they waiting for that Thursday CPI number maybe as well? Or
yeah, CPI jolts tomorrow. So I think there's a couple of news announcements this week that might add to that kind of sitting in limbo.
any guess on the CPI? I mean, it seems like the numbers are going crazy every time we go to buy something, but they're looking for 0.4% and then an annualized 3.4. Those seem like low numbers based on what's going on in the economy. Do you have any feeling on how the CPI number might come out on Thursday?
I think we could be a little higher than that. Like you said, there's definitely a lot of real world, costs of goods really going through the roof and a day-to-day basis, but we'll see. Yeah.
Yeah, I think it's going to be very interesting because if it's way under that number, you'd wonder who's taking the survey. Huh?
Mm-hmm.
Next one up, ProTrader Mike, you were saying lower, a little bit of behind the curtain on where you're coming up with that idea and your confidence level.
My confidence level, I wouldn't call it a confidence level. I'm getting a t-shirt made right now because this has been going on for some time. I don't like to be bullish. I don't like to be bearish. I just like to be right.
Yeah.
Okay. And trying to predict whether it's going upwards or downwards is been a pretty difficult thing. But what I'm looking at the chart is like 27 bars, not a quad top or a double top, a triple top, but a 27 bar top. If you take out that one bar in May, when it first started, those two at the top, and you draw a straight line across, it connects to the one that is pretty much there right now. So eliminating that, you have like a really single top, double top, triple top, going all the way back to April 12th, where it made that last green bar spike, right about April, right in the beginning of April, where before the big drop, it started and then it dropped, came all the way back up, and now it's all the way going to the right. So I think there's a ceiling there that's going to be very, very difficult to penetrate through. And we're going to head down towards that magic 4,000.
Do you think, do you have any opinion on, say, the Russell or the transports? Transport seems to be having some trouble up here, and the Russell seems to be trying to come off the canvas today, but who knows, right?
Everything that I do is number related, not trend, not chart, bar, stick, candle related. So if I saw a number and where it started and where it went to and where it's at now, with the risk reward favoring, like on this S&P 500, the reward is small because of the triple top, the 7 tops up there, but the risk is very big. So it tends to create a short scenario that's very, very favorable. And I'd say from 4,218, we're 18 points away from 4,200. We're going to go to that 4,150 test. And if it fails 4,150, you're going to probably head down to the bottom of those candles that it did last time, which is under 40.50 and towards magic 4,000.
Sure.
And then you'll have a nice, beautiful box between 42.50 and 4,000, which is a 250 point big box on the S&P 500.
Sure. Alaina, do you have any ideas behind your feeling that we might go a little bit lower as far as either fundamental or technical?
Oh yeah, so I'm looking at the 5-day chart now, and like we broke through the 50 EMA earlier this morning, pretty much at open, and now we're like sitting on the 200, and it looks like it's just like retesting to break lower. But I just kind of look at it as like, what would push it higher, and I really don't see anything right now catalyst wise to push the S&P 500 any higher. Amazon has been consolidating for a while now. Tesla is really like dragging, and Apple same, like it's totally flat. So I don't really see a strong catalyst that would push the S&P any higher right now.
Yeah, I was just looking at AMC, and GameStop, and they're both up tremendously today. So that's the explanation on why the Russell might be up versus the other ones, because those two stocks had now become a big part of the Russell, I guess, in some way, shape, or form.
Oh yeah, and GameStop's got they have a shareholders meeting and earnings on Wednesday, I believe, on the 9th.
Yeah, and like I say, they're flying here today. Leslie, what's your feeling as far as fundamental or technical reasons? I know you said you had a bunch of different ways that you're viewing the market. Could you explain how you came to your conclusion that we're seeing some sell patterns?
Well, I completely agree. I think it was ProTrader Mike that said, Jesse Livermore said it's not the bull side nor the bear side, but the right side of the market. So I try not to get into too many of directional biases and stick with the particular patterns that I use. I think that was a 4-hour chart that you just had up, but we can go back to that. The market's in a range. It's been in a consistent pattern since the March lows of moving to the upside and then going into consolidation range phases and then having some expansion to the upside, more ranges, more expansion, more range. We're currently in a range with the 42.38 highs being the high of that range. You can just drop, horizontal trend line right across those tops. And the low of the range is right around the 4,055-ish area. What I find really interesting is that if you study the center of the ranges, the 4140 area is the center of this range, and those tend to be magnets. So I think if we start to get some movement to the downside, we're going to see price move around that 41, 44 area. This is really sort of an easy pattern in a way, not that anything in trading is easy, but because we're right up at these highs, if the sell patterns that I'm watching, and right now it's an ABCD Gartley pattern, it's the name of it, it's a classic pattern. The completion areas were right up here, right around the open today. If that fails as the sell pattern and we get a strong close above that 42.38 area, then it's the range, the highs that have broken, and we've got an upside breakout area. So the market, from what I'm seeing from some internals, is really getting ready for a larger move right now. On the daily charts, we can see that we've had kind of doji closes the last several days. There were 7 in a row. We had a little bit of an up close last Friday. So the low of Friday, 4209, is going to be sort of an important support area to be keeping an eye on short term. If that doesn't hold, then I think we're going to get down to that 4140 area. So again, it's a matter of breakout to the upside above 42.38 and identifying whether that's a successful breakout or we still get this range that we're in. But right now we're in a big range.
Yeah. Oh, no, there's no
Very
doubt
well
about that.
said.
Yeah, no doubt about that. Okay, Harry, you're up. How are you seeing the possible up from here? You did mention the AD line, which is looking constructive, but what else is behind the curtain as far as your feelings? Yeah.
I totally agree with her. She's, I think, spot on. But more importantly, I don't know what everybody's seeing. I'm looking at a double bottom off the 50-day moving average, off the intermediate trend line, a run up to the tops, and a platform. This is as bullish as it gets. And if they take this triple top out, we're going to 44.15, and we may go to 4,500 as much as over the next 3 or 4 weeks. But it doesn't really matter to me. Like a couple of the others just said, I'm a day trader. I'm a swing trader.
Oh, yeah.
I look for individual patterns.
Yeah.
I can't tell you how many times the Dow's been down 300, 400, 500 points. And we've had a half a dozen stocks that were up 20%. Yeah, I agree. Trade with the trend if you can. But every day I come into my room. Today, for example, I have a list of 7 stocks that are up 15 to 20% or more that we day traded. So I don't really care where the market goes, quite frankly. Yes,
and that's the case for most of you guys in that, you're not really trading the broad-based indexes. You may look at them, as just a general barometer, but you guys are really stock picking and looking for situations where, irregardless of the S&P, you could have a great opportunity.
100%. And every day in my room, we come up with ideas that are great day trades. And I come up 4, 5, 6 times a week with great swing trades that some of them are up 2, 3, 400% in the last several months. But in terms of if you're asking me where the market's going, I'm looking at it as I can't believe the market's going to go down from here with all the underlying technicals improving as they're consolidating. Usually during the consolidation period, you see some flat stuff, you see some more declines and advances during a pullback, but not the case now. This is as bullish as it gets, quite frankly. And if we get a move to the upside, you could see the short squeeze, a mother of all short squeezes. I'm just thinking there's such a long short position, a big short position in this market right now, that if they squeeze above that triple top in the S&P, you could get a blow off, which might be a final wave into a topping pattern. And also take one other thing in consideration. Look at the McClellan oscillator, look at the VIX, and look at all these other indicators that are not signaling sell. If the McClellan oscillator was plus 150 or 200, I'd say we're overbought. We're nowhere near overbought. The oscillator, I believe, is 30 or 40. And so there's lots of reasons to assume that if we break to the upside, we have room to run, and very quickly, I might add. And some of the stocks that I follow that are broken out, and that's another thing I want to point out, folks. I'm seeing so many stocks breaking out across key resistance levels and taking out those 3 to 4 month declining tops lines and kind of forming V bottoms with right-handed extensions or W bottoms, whatever. But the bottom line is I'm seeing more breakouts than ever. Look at the IWM today. The IWM, and by the way, and look at the biotechs. IWM is up almost 2%. And more importantly, the LABU, which I follow closely for biotechs, is rocking it today. 15%. In one day, today, the LABU is up. So I'm saying we go up.
Yeah, Biogen got a positive result out of the FDA today. So that was already discounted a little bit on Friday's action.
I wouldn't even, I'm talking about, I follow dozens of biotech stocks. Can't believe how many of the low price ones are starting to take off here.
Yeah, but I mean, it's nice to have one of them get some good news, right?
Yeah, exactly.
Yeah, I mean, it just creates a nice environment for the group.
And by the way, today's action on the LABU pops across the declining tops line and across the 50-day moving average. It's a clear technical breakout. I think biotechs lead the market higher here. And the SMH as well. With the worldwide semiconductor shortage, it's like a no-brainer to be involved in anything that looks bullish in a semiconductor trend. I have
semiconductors are the place.
Yeah, you definitely bring a good point up on the VIX because, I obviously follow the VIX all the time, and it's been having a very difficult time maintaining anything near or above 20. And there are some guys who I think are pretty sharp who think there's going to be a 12 print on the VIX this year. And if there's going to be a 12 print on the VIX this year, your scenario of blowing out the highs and going on a big run would be the thing that would take it there.
Totally agree.
Yeah. And then, there's so much money on the sideline. If the word gets out that the Fed's going to keep these rates at ridiculously low levels, these people can't stay in money market forever.
Yep.
So at any rate, let's go through a little bit more details on, because you guys are all doing different things. You're not trading the same stocks. You're not trading the same methodology. So I think it would be helpful for the listeners to get a little bit more detail on what each one of you guys are doing in the markets and what you think looks good and what approach you like right now. So let's start out with Tim. And Tim, give us a little bit of idea of, some of your favorite things that are going on and some of your favorite mechanisms that you're using to create decisions.
Yeah, so I'm mostly looking at the E-mini S&P in the morning session. And I would agree with Harry that the market internals are definitely a super helpful guide for intraday trading and kind of building some of this, what's going on under the hood over a period of days, or in this case, a couple of weeks. And so by looking at the market internals, and I use a smaller time frame tick chart to place my trades, as well as a 5-minute chart. And it's really just about, going with the momentum on the morning session. So even though we might have some bigger trends in play, looking for, okay, where are we opening in relation to the prior day's close, the prior day's high and low? Are we breaking out of, that prior day's high and low? I also like to look at the first 30-minute high and low. And like in today's case, when we kind of open up and then don't really go anywhere, we've we moved lower and then just kind of stalled out, moving sideways just below that first 30-minute range. There's really not a whole lot to do as the morning kind of progresses. So I try to focus on the early part of the day, right after the NYSE opens, and I'm looking at those market internals. The NYSE tick is super helpful for day trading the ES. And commenting on, I think it was Leslie who mentioned some of the consolidation. When we're consolidating, whether it's a daily chart or the intraday time frame, when we're consolidating, we're really building a lot of pressure. And so you've got players coming in from both sides, and we're not going anywhere. We're kind of building more and more and more. And that does tend to lead to, a trend coming out of the consolidation. And so whether you're on a smaller time frame, like, an intraday time frame, and you see a consolidation, it doesn't necessarily mean that, it's call it quits for the day, because a lot of times you go through these consolidations that might last a couple of hours, and then you get that pop. So looking for trending situations versus consolidation periods of time, and then watching for those breakouts and breakdowns within the session are a really good way I've found to kind of capitalize regardless of what's going on in the larger trend in the daily chart.
Sure. As far as ProTrader Mike, I know you really have a special approach unique to yourself. So could you be a little clear on things that you're looking at now, and kind of explain a little bit how you come up with these ideas?
Absolutely. Thanks for asking. Everything that I do is price related. I used to be a professional poker player and studied hundreds of thousands of poker hands to find that positive expectancy came into play on 13 hands that won time and time again. And then I went to the stock market and studied the data on hundreds and hundreds of thousands of trades and which ones were the best trades that won all the time. And I noticed that all the best winning trades were right under the even number, or par, right at 98 cents under the even number. Positive expectancy and momentum would take over, and the stock would go through the even number. The young lady mentioned Jesse Livermore. I'm going to play this for you right now.
The whole world. The stock I was most bullish on in those critical days of early 1915 was Bethlehem Steel.
Jesse.
I was morally certain it was going way up, but in order to make sure that I would win on my very first play, as I must, I decided to wait until it crossed par. I think I told you it has been my experience that whenever a stock crosses 100 or 200 or 300 for the first time, it nearly always keeps going up for 30 to 50 points, and after 300 faster than after 100 or 200. One of my first big coups was an Anaconda, which I bought when it
Jesse Livermore back tested the strategy 100 years ago, and it works. It's the same system that I've seen develop, how a stock right under the even number will go through par. And every day in the morning, there's the gainers list on the NASDAQ. I like trading the faster, more moving stocks and relate them to where they're going to move through the even number. And sometimes, it's always working in the market, but there are phenomenons like last week, AMC, GME, COS, CLOV, BLNK, all these stocks have gone up 100% in the last week alone because there's been a short squeeze phenomenon. Right from AMC, from 15, it went to 70. If you were reading the headlines, they were talking about short squeezing on the stock. So all you have to do is go into sites like shortsqueeze.com, find the 5 stocks that are the most shortest out there in the market, and you found them. AMC, KOSS, CLOV, BLNK, and BBIG, to give a few as an example, which I sent out in my Sunday newsletter, Workhorse WKHS last week from 9 to 18. The reason why they all ran 100% is because of this short squeeze phenomenon that's been taking place in the last week or two. When it's going to end, who knows? But the trend's your friend, and we ride those trends in the Mojo Day Trading Room. A month earlier, it was the NFTs when the cryptocurrency was going crazy. TCAT, OCG, and 5 other stocks in the market all trailed when the NFTs were going crazy in the cryptocurrency. So in the day trading realm, we play what's hot, what's in momentum. We play it for an hour. We play it for 2 hours. We're done. I do a YouTube show recapping what we traded. And that's pretty much the daily routine on the day trading side. The swing trading side, I have a newsletter, which is based on this system called the Ken Slim system of picking stocks. For the last 30 years, I've been a disciple of William J. O'Neill, editor of the IBD, author of How to Make Money in Stocks. He studied every winning stock in the history of time that ever went from 10 to 100, saw they had 7 similar characteristics, applied an acronym called Ken Slim to that, and it's worked phenomenal. I have a proprietary knowledge base on the small cap side where I apply this formula to winning stocks that I like to pick. The C is current earnings per share. Every winning stock in the history of time had 30 to 50% winning quarterly earnings quarter after quarter. A, annual sales, 50 to 100%. All the companies had something new, which stands for the N in the formula. And if you have these 7 characteristics, odds are that you're going to have a winning stock. And this is what I've done on the swing trading side and the day trading side. And it's what I've done for the last 10 years since I've had Mojo Day Trading. I'm not changing what's working.
And as far as mojotrading.com, do you have some kind of a newsletter where you print out this stuff so people can follow it, or how do people follow it?
Every Sunday, I do my research.
Right.
I go through the Market Smith database online. It has about 8,000 stocks that fit the Ken Slim system. And I sort according to $10 and lower, certain characteristics that I like. And I put out 5 to 6 picks every Sunday night in a newsletter. That's a really nice format, a PDF newsletter that tells you why I like the stock, where I think it's going, why I like it, how it fits the Ken Slim system. And I've been doing that for the last 9 years for the public, 30 years for myself, 9 years in the Mojo Swing Trade newsletter. And it's $149 a month subscription. I have a lot of people in it. And once you get the newsletter and you see how it's laid out with the structure and can follow the Ken Slim and see the picks, you wind up staying for a while because it works.
Sure. Okay, Alaina, working with some of the newer traders out there, what are some of the things you're focused on and some of the methodologies you use to come to your conclusions?
Sorry, I was watching Biogen. But just working with new people, I think patience and just really setting those expectations, and also just it's really hard to teach people that this is like a long-term game. People see like AMC and GameStop and they feel like it's more like the lottery. So I think just like setting those expectations and really focusing on technical analysis, that's really been like my bread and butter. I just don't want people to feel like they can just see a stock on Twitter and jump into it and be successful. So that's really the hardest challenge I've seen so far.
Is there a particular moving average you tend to look at, or a particular time frame, weekly, monthly, hourly?
So I'm a scalper, 100%. Okay. I love to scalp. So I'm usually on a 1 day, 1 minute chart.
Okay.
And then as far as indicators go, I use like my EMAs, 9, 13, and 50. I also like the 200 on there. And then I'll also use the MACD. And then I like to use the RSI, 14-day RSI. And then on top of that, I kind of stack my 50-day EMA on top of that RSI. So that's how I scalp.
Sure. And that sounds like be very helpful. Hey, Leslie, a little bit about what you are kind of focused on. And again, the method you use to come to your conclusions.
Well, I want to start with, as far as teaching traders, master yourself, master your trades, because trading is not just about learning an approach, something technical. it's about learning method and mindset and learning how to build those two separate elements, both as skill sets to sort of blend together as one. So I'm really big when I work with students on also identifying the areas of the mindset that are either working or not working with what they're doing. So I just want to throw that out there because I really am the first to admit trading is not easy, and I never want to, you know, lead people to believe that you can just jump in here and learn this in a few months or even a couple of years. It does take a long time and a big commitment. But what I do and what I've studied over the years is I started years and years and years ago, starting out trading really classic technical analysis type patterns. And I met Larry Pesavento. Some of you probably know his name. And he's really the person that brought us Fibonacci ratios into the public eye combined with specific harmonic patterns, the AB equals CD, the Gartley pattern. These kind of come from way back when H.M. Gartley wrote a lot about these patterns, described them. So I combine those, I use a pattern recognition to teach traders a process. So even though we're using specific patterns, it's the process of learning that's important and being able to identify and evaluate your own outcome. Because if you can't evaluate your outcome, then you're constantly in a hamster wheel of doing random trading. So you have to have a solid process and approach with trading. So my approach is pattern recognition, and I am always open to direction. So for instance, you know, even though right now I've got some sell patterns up here at the top, you know, we're testing these highs. So it's not unusual for me to see these types of sell patterns. But I'm open to an upward breakout. As I mentioned, I've got the levels marked out. I've got my downward levels marked out. So I'm ready to switch directions. The price can do whatever it wants to do. And I've learned over many years that I go with that I really can't predict what price will do. So I follow price behavior and I look for the footprints um, of when price is getting ready to move. And right now I'm seeing a lot of footprints of that. And I will say, I was looking at some sentiment things earlier today. I don't see things tipping heavily to the bearish side yet. So I think that was Harry. You were mentioning, was that you mentioning upward, I think, earlier?
Yeah, Harry is on the upward side.
Yeah, and so I can see that scenario playing out, you know, as well. And I can see some testing going on, you know, from where we are. So, but again, I think the important thing right now is just to keep in mind that we're in a range, and usually these are coils. Coils are a form of energy. And this is where, you know, trends or continuation of trends are born. And so I think that's all really you need to know. It's where those price levels are right now to keep an eye on. And then we'll let the market tell us from there what it's going to do.
Yeah, and if there's 3 sticks of dynamite that could light up and blast the thing, it would be Thursday's CPI plus the Fed meeting, and then Q2 earnings are going to start coming out before you know it. So you got plenty of news on the horizon that could light the fuse. With regards to your methodology, are you looking mostly at hourly graphs, daily graphs, weekly graphs? You know, how are you looking?
Yeah, I use a combination of time frames. I generally, with my own trades, I usually use a smaller time frame for entries, but I combine my analysis on. I go backwards of what's normal, which for me is not unusual. But I start with the smaller time frames and I work my way out from there. And that's because momentum is seen on the lowest time frames first. Now, whether the ripple, the catalyst to that on the smaller time frames is going to be large enough to work its way out to the larger time frames always remains to be seen. But I can see those footprints the earliest on the smaller time frames. So I tend to start with the small time frames and work my way out to the larger time frames. And I'm looking for specific patterns. And these are pretty simple patterns. I haven't reinvented the wheel with any of this stuff. I have like just a whole bookcase with nothing but old books from the early 1900s, 1920s, 1930s, 1940s, because I really don't believe there's anything new since then. So I think we can kind of just use what the forefathers of technical analysis taught us, and it's all still relevant.
Okay. Hey, Harry, a little bit about some of the things you're focused on, and again, how you come up with your ideas.
Well, I do something that's pretty unique, and I'm not sure if any of us are doing what I do every day. And I'm told that my attention to details is beyond comprehension for some people. I'm in every morning at 3:45 West Coast time. I'm looking at pre-market moves. I'm looking at news. The only time I look for news is in a pre-market when I want to know why a stock is gapping and running and how strong that move may be based on the kind of news it is. For example, if it's a FDA approval after a phase 3, that's one thing. But if it's a clinical trial results and everyone gets excited, it's often a popper dropper, or any kind of contract, whether it's a small or major contract or any kind of deal. But the only time I'm looking at news is because I want to see what's triggered the price. Once the price is triggered, I want to see what price and volume is coming into it. I'm a big believer in the price volume surge. I coined that phrase a long time ago. I believe that there's the key is not price and not volume, but both, because price without volume and volume without price is not as meaningful. When you have a combination of price and volume, breaking stock out of a trend, out of a pattern, across resistance, over a moving average, or a combination of any of those factors, you have a very high degree of probability of that move continuing. Now, in the pre-market, I look at dozens of stocks and I come up with what we call a focus list of at least 8 to 12 stocks, sometimes as many as 20. And then I do a 1-hour webinar with my people before the market opens, and I go over every single one of these stocks, and I tell them whether it's going to be a buy alert or it's going to be left on my watch list. And at that point, we will continue to follow the stocks during the course of the day. 15 minutes after the opening, I jump on, I'm back on showing them what the first early action looks like and whether the follow through that we saw in pre-market is creating a thrust that's going to create a 45-degree angle type rising channel. It's amazing to me how often a stock will pop and run in about a 45-degree angle. And you can draw your trend lines over hundreds and thousands of stocks that are broken out in the course of a day. And invariably, they're rising in an intraday channel. So that'll give you a little idea where the channel bottom may be. And if you take a look at previous lows and previous highs, you can get an idea of where support resistance might be, as well as, there's just a lot of factors that are coming involved. You can do a 5-wave Fibonacci move or Elliott wave move, retracements. There's a lot of things that I incorporate in my daily trading. But the number one thing is price recognition, pattern recognition. Because I believe that, and back in 2000 when the market crashed and everybody got sucked in on the first dip after the market came down hard and everyone thought, it's another opportunity to buy. Then it bounced a little bit and then rolled over and people kept buying more on the downside and they got finally stopped out or they got sold out on margin. I decided holding stocks overnight was a bit more risky than I wanted to take. And why not trade 1-minute price patterns when they're the same, exactly the same? If you did not know there's a time frame on it, you couldn't tell whether it was a daily chart or intraday chart for the most part on most of the stocks that I trade. So that's what I do in my room, and I'm constantly updating every hour. I come back on with my people. I show them the charts. My webinar, by the way, when I come on in the morning is on all day. They can see me drawing my lines, and they can see me drawing my trend lines and my support and resistance levels. And I will, in the course of the session, update them on stops and targets. I'll always give a second or third target, or I can give them a support or resistance level where they can stop below. But I'm a big believer in entering in tranches and exiting in pieces as well. You don't have to sell everything all at once. And the way you stay in a trade is by keep raising your stops and exiting partial positions at each target. Guarantee you a profit, whether the stock continues to go up or not. And with several hundred people in my room, some very intelligent traders, we come up with ideas that I even haven't seen from. So it's a great place to be. And
yeah, you're sharing ideas, which is sometimes very good.
Yep.
More than two eyes on it. So when you're entering in, are you staging in, or you get in at one time and you fade out as it hits your targets?
Well,
Or it breaks down under your stop.
A lot of the better traders in my room, they know when they get a buy signal and they can see the price pattern breaking out, and they'll sometimes take a full position. But
Right.
even then, I always tell them you can buy when it breaks out and then wait for a pullback and see if it holds the support level.
Right.
But I would only do it on a 1/3 position, because if you're stopped out, it's only a third of what you might have lost if you had a full position. If it goes up, you can always add to it on the way up. The biggest lesson in Wall Street, in my opinion, is never average down, always average up. The most money I ever made in my life is when I bought a stock at 17. I averaged in at 27. I bought more at 40. I bought more at 70. I bought more at 85. I put my stops in at 93 when it hit 110, and it eventually hit 120, which is my target.
Trading is more like a progressive, where you press your bets that are working as opposed to adding to things that aren't working in this hope that they'll magically start working.
Yeah, catching a folding knife, you're going to cut your fingers.
Yeah, I got one. Before we get into what you guys are going to talk about tomorrow in the sessions, I have one quick question for everybody. If we could just briefly go over it, Tim. The question is we're all talking about trading, and obviously there are the other side of it is the risk control. So as far as money management, which is the key to being in anything long term where you have games of chance or risk taking involved. How you handle your bankroll, how do you handle your risk capital? Can you give us a little bit of an idea on your feeling on, how to manage the risk capital that you use?
Yeah, so from an intraday perspective, just having that essentially a set stop on each trade.
Okay.
If you're trading the same market, it's pretty easy. If you're swing trading a stock, what I'll do is just calculate my risk. So if I want to enter at 100 and exit at 95, pretty basic. Take that $5 of risk divided by how much you want to risk, $500, and that's how many shares you get, 500 divided by 5.
I got you. Yep.
As for other elements of the risk parameters, having a full daily stop loss, so you might take 4 or 5 trades in the day, but having that daily loss limit set up front is super important. Same goes for the week. If you can go back and look at a handful of your trades, get an idea of what some of your bigger drawdowns were, and put some parameters in place to prevent yourself from having 1 or 2 days wipe out an entire month. You can get through those rockier times, or maybe there's times where there's not as many trading opportunities, and if you can get through those periods, then when you're in a sweet trend or the market's just moving really well and kind of applying your setups really easily, then as Harry said, just it's it's a element of managing your stops on the winning trades and just raising up your stop placement.
Okay. Sounds good. I got it. Just to, cut to the chase a little bit on this question, do you lean more towards stop losses? Do you lean more towards limiting the amount of positions you put on? So is it position restrictions, or is it stop losses, or something like that? ProTrader Mike, how would you approach the risk management side?
I approach everything with a risk reward standpoint.
Okay.
I like to see where it started, where it came from, where it's at now, what the potential upside may be. And if the circle is big on the upside and small risk circle on the downside, I'll play it higher. If there's a big circle of risk on the downside where it could drop far and it's going to struggle to go up higher, and there's a small circle, I'll play it lower. I only like to play 1 or 2, 3 positions for maybe at a time swing trading,
Right.
because I'm monitoring them close. And like the other gentleman, I do a 3-step approach when I buy. I do an entry position, the smallest. I'm going to buy from, let's say I want to do 1,000 shares. I'll go 100 shares, 200 shares, and then 700 shares. I'll take an entry in the particular stock because I have no idea which way it's going, higher, lower, or the same. If it goes higher, I'm going to wait until it goes 10 cents higher, and I'm going to add to the position. And then when it makes its first dip, As long as it's still strong at the very end of the day, I'm going to buy my third position as long as it closes within a certain small percentage of the daily high, because that bar is a Marabuzu green bar close, and the next day it should continue to go higher. If the stock stays the same, I'm doing the entry and I'm waiting patiently throughout the day to do my second entry. And then the next entry would be the following day to see which direction that stock would go, because I still have no idea, because it's staying the same, which way it's going, saving my biggest buy for the first green bar higher. If the stock is going lower, I still do my entry buy of 100. I wait during that day, or even to try to get the low of the day. And if it's still going down, there's nothing that changed with the company in my research. I just think it's a discount. I'll wait until the following day, and then I'll get into my second entry, waiting for the first green bar higher to get in on my third. And once I'm in an entry of 3 times, I do the same thing on the way out. I tell my subscribers, wait for me to tell you the stock's up 20%, 30%, 50%. Use your own discretion, watch the price action and volume, and sell half of the position for a profit. Raise the trailing stop mentally on the second half. Watch it, because you only got 2 or 3 stocks. You can sign in at lunchtime. You could sign at the end of the day and watch it. Don't let the second half go lower than the first part you sold, and you can never lose on the trade. And that's how I scale in and I scale out in swing trading, and the same style in day trading. It's 3 or 4 in, 3 or 4 out.
Got it. Alaina, your ideas, is it, again, more towards the size, or the way you go in and out on a percentages, or stop losses, or what do you think?
So I definitely think stop losses are important. I used to not use them and I learned my lesson, but I'm more focused on percentages. More recently, I started taking larger positions. I just really like using smaller amounts and getting like larger percentages. But that's just like my personal risk management strategy. I don't like to use a lot of capital when I trade. It makes me nervous. So.
Sure. Let the market make you the money with a lower position type thing.
Oh yeah, more positions and just lower entry costs.
All right, Leslie, how are you feeling as far as risk control?
Yeah, well, I think it's you have to understand what you're doing. It's a really personal aspect of trading, and we just heard these different approaches to it. And so that is something that, again, coming back to you master yourself, you master your trades, that the way that you approach trade management, you really trade your emotions. So you have to know yourself well enough, what you can do. She just said smaller positions for her is what works. I think that's just awesome that she knows that. And for some of the other ones on the panel here, we have larger positions and how they scale into them. For me, I tend to go, it depends on if it's a range or trend. And so I identify the market condition that I'm in, and I trade the S&P 500 mostly. If I'm trading stocks, those are usually a little bit longer term holds, but the S&P is usually a shorter term hold for me. And based on the specific patterns that I trade, I generally enter on the full position, and I have set targets, and I'm a tape reader. And so if something doesn't look right, I'll exit part. If not, I tend to keep the stop in and the target in, and one or the other gets hit, and that's it. And I just repeat that, wash, rinse, and repeat.
Sure. Hey, Harry, how are you working with risk control and money management of the bankroll?
Well, it's a combination of things. I also believe in, I remember once interviewing a client with 38 positions, and I asked them, why in God's name do you need 38 stocks? Why not concentrate in 8 or 10? I don't even want to see more than 3 to 5. I tell all my people at any one time, you shouldn't have more than 3 to 5 positions, number one, because it's a job to monitor these things minute by minute or moment by moment, especially if they're intraday or swing trades. Not so much swing trades, but you're looking at day trades. I say 1 position at a time, 2 max. If you're a real professional and you're at ease with it, maybe 3. But number one in my room, every trade I put out there, I tell you where the stop is. And during the session, I'll tell you where to raise it to. But I'm a very big disbeliever in percent stops or in trailing stops. I think trailing stops are simply a way to limit your loss, but not intelligently. You can be stopped out so quickly on a trailing stop, particularly if it's too tight, if you're not aware where the stop should be. Why not put your stop under support, under where the moving averages are, where the trend lines are, where the intraday support is? At that point, the odds of breaking 2 or 3 of those levels at any one time is great in terms of trend direction, and you want to be out of it. So I'm a big believer in stops, and I tell everybody in my room, all you need is one stock to blow you out of your entire position, or particularly if you're on margin. But only takes one bad stock to really ruin a good year or a good month.
Right.
So for me, it's always take the best loss is a quick, short loss, a small loss, and just move on. Because
Exactly. Yeah.
I'm pretty good at this game. I have 75, 80% winners, but those 10 or 20% losers have got to be small ones. If you want to, you can take 4, 5, 6 small losses in a row, no problem. But one big one will destroy you. Because you can have a losing streak of small losses and then have one big winner, and you've more than made up for those losses, and perhaps even quickly. So I'm a big believer in stops, but I don't believe in trailing stops, and I don't believe in mental stops. As good as I am, and as long as I've been in this business over 50 years, I still use stops every day, and I won't use a mental stop. You know what a mental stop does? It gives you an excuse to reason why you shouldn't have a stop when the stock goes down, because you like it fundamentally.
You need to have some kind of concrete idea of where you're coming out.
You have to, and that should be, you should know where your stop is before you enter the position.
Exactly. Yeah. Okay. We've got a few minutes left, so we're just going to go around the horn, and please tell people how they can get a hold of you, but also briefly, very short, 30 seconds or less, what you're going to cover tomorrow in your in the broadcast. And we'll start out with Tim.
Yeah, thanks, Jim. So tomorrow I'm going to be talking about day trading the E-mini S&P, focusing on those first 90 minutes of the day, just kind of run through the setup that I use and what I look for each day. And you can find more about me over at eminimind.com.
Perfect. And we'll definitely look forward to hearing from you tomorrow. ProTrader Mike, mojotrading.com. Again, what are you going to be covering tomorrow so people can get excited?
Well, give me the topic they're going to get excited about, and I'd love to talk about it.
Yep.
Yeah.
So Mike and Alaina are actually going to be on Thursday.
Oh, okay. Well, whenever you're on, which would be Thursday, and is Harry
and
on?
Harry's on Thursday too.
I'm on Thursday as well.
So Tim's on for tomorrow, correct?
Yes.
And then, okay, so then the next guys are going to be on for Thursday. So everyone who's listening, make sure you make a note of that. Again, ProTrader Mike, again, just a quick thing about what you're going to try to accomplish on Thursday.
I'd like to talk about level 2 trading off the montage, the level 2, how it works and how I relate that to my futures trading with the NASDAQ.
That sounds like a lot of good information to definitely know about. So that'll be perfect. Alaina, again on Thursday, what do you plan on covering?
Yeah, I want to talk about scalping and like scanning the market for high volume, like early in the morning. And you can also find my stuff on optionsbay.com as well as investingbay.com.
Sure. Hey, Leslie, what do you have happening on Thursday?
Yeah, actually, I'm Tuesday. I'm tomorrow.
Yeah, Leslie's Tuesday as well. Yeah.
I'm on tomorrow.
Okay, so tomorrow, what are we going to talk about?
We are going to be talking about identifying range trading versus trend trading, because if you can identify the type of market environment that you're in, then you're going to know what type of trading tactics to apply to that. We're going to start looking back at 100 years ago on some charts and bring it forward.
Perfect. And Harry, on Thursday, what's going on your broadcast?
Well, I'm going to be talking about how to identify stocks in early trading or even pre-market for potential day trades, and how some of those stocks can translate over a period of a few days into a swing trade. We'll always, I find it's invariable that some of my day trades become swing trades because the trend is so strong when they
get stuck.
Going for several days.
Sure.
UONE's moving. That was a swing pick a month ago.
Well, I'll tell you, there's a lot of education here to be done. So that's fabulous. And everyone should definitely take advantage to become aware of all the different approaches here, because they're not all the same. That is for darn sure. And these guys have been in this thing for a long time. They got a lot to bring to the table. So educate yourself and take advantage of their knowledge and see how they could maybe add value to whatever you're doing to try to make some money. OptionProfessor.com is also going to be doing a broadcast, and we're going to go over different ways of going about investing from the standpoint of income, dividends, stuff like that. Also running over into tech and value and try to get growth. And we're also definitely focusing on international, because we see emerging markets, Europe and Asia being fabulous opportunities. And then, of course, we'll end up with the gold, silver, oil, and crypto to discuss how we see those risk markets unfolding. So that's OptionProfessor.com. Right now, it's top of the hour. Our timing is absolutely spot on. So let's go right back to David, and thank Tim and ProTrader Mike and Alaina and Leslie and Harry for being here, because sharing their time and information should be acknowledged. So thank you very much, you guys, and back to David.
All right, thanks everyone. Ton of good information today. So just a quick reminder for everyone: be sure to subscribe to Timing Research on YouTube and your favorite podcast app. You can also just go to TimingResearch.com to get access to any of the shows, including this one, as soon as I can get posted, as well as any of the past shows or events. And just another reminder about the event we have this week. So this will be the 30th Synergy Trader event, and this is a partnership between myself and Anka Metcalf of Trade Out Loud. So we've been putting on these events together, and so it's going to start out tomorrow at 10 a.m. Eastern time. Tomorrow will be the dedicated Futures Day, and so that's Tuesday, June 8th. Like I said, starting out at 10 a.m. So from today's guests, Leslie and Tim will be on tomorrow. And then on Wednesday, again, we're starting at 10 a.m. Eastern time. So we're going to have 5 presentations on Wednesday, all about Forex. And the Option Professor will be doing the one of the presentations that day. And then on Thursday, June 10th, will be the dedicated Stock and Options Day. So of today's guests, Alaina, ProTrader Mike, and Harry will be on Thursday. So we have 11 presentations scheduled for Thursday. So, and you can get the full list of presenters and schedule if you go to TimingResearch.com/live. They'll be listed there. Also, you can access the live event through the rest of the week from that page as well. So I just want to thank my guests again for today: Tim Racette of eManyMine.com, ProTrader Mike of MojoDayTrading.com, Alaina Nicole of OptionsBay.com, Leslie Jouflas of TradingLiveOnline.com, Harry Boxer of TheTechTrader.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thanks, David.